Good morning and welcome to this Monday, November 25th edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. I want to make a couple of announcements before we get started. First, there will be no Trading Places Live on Wednesday due to the Thanksgiving Day holiday week. So we're going to take a break there. Financial markets will be closed on Thursday, and the U.S. stock market will have an abbreviated session on Friday, closing early at 1 p.m. Eastern Standard Time. Also, this Friday will mark the second Market Vision 2020 mini-series event. Last week, we featured Mary Ellen McGonigal, president of MEM Research. This Friday, I will be featured, and I'm going to be discussing the creation and design of winning portfolios. That will get started at 11 a.m. Eastern Standard Time. All of these mini-series events are completely free to those who subscribe to our free Market Vision 2020 newsletter. They are also recorded and available to those that cannot make the event live. So I do want to just show you as we get started here today that you do need to register. You need to subscribe for this free Market Vision newsletter. So let's check this out here. I just want to show you. If you go to earningsbeats.com and then at the top, and this for some reason, I don't know why my tabs don't show up here, but at the top at earningsbeats.com, you'll see a tab that says Market Vision 2020. If you click on that and come in here, all you have to do, put your name and email address up there in there. We'll keep you up to date on all of the happenings leading up to the actual Market Vision 2020 online financial conference that takes place on January the 4th. That's a Saturday, but you do need to subscribe in order to get those updates and also to be eligible for these mini-series events. So I do look forward to seeing all of you on Friday. And if you can't make it, I know it's a holiday weekend, a lot of folks traveling. I don't know, call me a glutton for punishment working on the Friday after Thanksgiving. But I do think it's going to be a great event. Again, I'll be talking about the creation and design of winning portfolios. It's probably going to last maybe 30 to 40 minutes, something like that, to give you some idea. But it is during the market while the market's open, because the market is open until 1 p.m. on Friday. All right, let's get into the action from Friday. So the Dow Jones Industrial Average up 109 points. Not setting a new high. Last week, we did see some consolidation. You can see that across all of our major indices. Small caps continued to move lower. I wouldn't exactly say that it's been a huge move to the downside. It's been very slow and methodical, but there is underperformance still in the small cap arena. But when you look across the board, all four major indices climbed on Friday. The 10-year Treasury Yield is starting to bounce back off of the lows that it saw early last week. We got down below that 50-day moving average. Now we're trying to get back up above it. Really not doing much today. The 10-year Treasury Yield pretty flat, but it's up just fractionally to about 1.78%. Also on Friday, financials leading. And you can see, even though the market's been pulling back a little bit, financials actually closed at a new high on Friday. So the relative strength that we saw in financials several weeks ago, it's continuing. And it's continuing with the 10-year Treasury Yield coming down. That, I think, is really important to note, because you would think the Treasury Yield falling would actually have a negative impact on financials, and it's not. So one of two things is going to happen. Either the 10-year Treasury Yield is going to turn back up, which is what I think is going to happen, or financials are going to turn back down, because this move down to the downside will squeeze the net interest margins in banks and some of the other key areas of the financial area. So anyway, really strong action on financials on Friday. I think they look really good. The flip side, however, discretionary had a good Friday, but this group has not been performing very well. I would say it is clearly among the aggressive sectors. It has clearly been the laggard, which isn't horrible. Not all of these aggressive groups are going to lead at one time. We saw discretionary and technology leading for quite a while. Communication services also did very well. And during that period, financials and industrials couldn't get out of their own way. So it's not that all five are going to lead at once, but all five remain healthy. And now we're starting to see a lot of that rotation shift over to the financials and the industrials, which also had a pretty nice day on Friday, although not setting a new high or at least not a new closing high like the financial ETF did. Clothing and accessories, this is in the discretionary area, had a pretty nice day on Friday, bouncing, and you can see these equal highs coming up here around 330 and the rising lows. So the chart, I think, looks pretty strong. Transports, very similar to the small caps, making this big move back at the beginning of November, and then for the last couple of weeks, you can see it's just been a steady downtrend. Transports actually had a very nice day on Friday, though, led by both airlines and railroads. All right, let's keep moving on here. We've got the 10-year Treasury. Let me get an update here. Just make sure we got the very latest 1.774. So it is literally flat right now as we speak from Friday. There are no economic reports of significance due out today. So probably not going to see a whole lot of movement in that 10-year Treasury yield based on any kind of moving, economic news. All right, a couple of other things that I want to talk about here before we get into some other areas. I do want to bring up the XLY because what I'm seeing here, just mentioned the consumer discretionary on a relative basis not doing well. On an absolute basis, it's not horrible. I mean, we're in an uptrend. You can see pretty clearly coming off that December low last year, uptrend, higher low, higher high, higher low. And actually what I'm seeing, I'm going to go ahead and annotate this, is a little bit of an ascending triangle. I wouldn't say it's perfect, but I think that the formation is similar enough that I would certainly call it a continuation, bullish continuation pattern here. But there, I think if you connect these lows coming up, so you can kind of see the equal highs coming across here, the higher lows. I think this is still very bullish. So even though consumer discretionary may not be leading the market, it's participating in it. And that's really important during bull markets. We want to make sure that all areas of the market are participating, at least the key aggressive areas for sure. All right, let's also take a look at the transports. Pull this chart up as well. And I think the key here with the transports is, and I've talked about this, at 11,200 level, trying to get through. We had that false breakout, pulled back. I'm not surprised we're pulling back. I think when you look at this in the short term, I think you see a move up. Actually, you see this move up, pull back, another move up, and a pullback, but we're holding that low. So I think in the short term, we're still in an uptrend. And more importantly, I would say from an intermediate perspective, once we made this big move up into April, you can see we put in some pretty important support down around 9,700. So I don't know that we go back down to 9,700. I'd be surprised because I do think the market is breaking out, and I think we're going to have a very solid advance. But technically on the chart, we've got an uptrend, and I think as long as 9,700 holds, from an intermediate term perspective, transports remain in an uptrend. All right, the clothing and accessories, mentioned this one earlier in the show, and you can see here that move up that I was talking about. Somewhat equal highs coming across here, not exact. But you could call it an uptrend in a cup and a handle coming back. There's a lot of different patterns, I guess you could see, depending on how you view the chart. I think the chart in the short term is very bullish. Intermediate term, I think we got some work to do. We've got the high from July. We've got to clear at 340, and then all the way back in April at 355. But this is one of the things we have to consider when consumer discretionary is out of favor. You're going to see more individual industry charts looking not so great, because the group's not getting the rotation of the money. Money's coming out of this group and going into financials and industrials and technology and so forth. So more and more of these industry groups are just not exactly bullish. I wouldn't say that they're definitely not bearish, but they're just more consolidation type charts as opposed to breaking out and uptrending. Oil this morning flat. Gold, I was looking down $7 to $14.56 earlier. That was probably 20 minutes ago. Probably hasn't moved a whole lot since then. But I just want to annotate, I think this is an important chart here. I am not a gold fan. I was fine while it was uptrending, but knowing that its long-term relative strength is down, that gives me cause for concern. And when you look at the chart here coming across, we've now moved back below the moving averages. I see a downtrend clearly in play. Here was your breakout at 1450. Don't want to lose 1450 as we go forward. All right, I think that's it for that. There were some news stories out this morning I want to bring you up to date. Charles Schwab did announce its $26 billion all-stock deal to buy Ameritrade, AMTD. So now that the deal is coming out, it's all stock. I'm not sure. I didn't look at the pre-market this morning because this deal was rumored last week, and both stocks took pretty big moves to the upside. I'll show you the charts here. So I wouldn't be expecting another huge move because I think it's already factored in. They talked about a $26 billion deal last week. The one that's likely to underperform, if they do, though, will be Schwab, just because it is the acquirer in an all-stock deal. So you're going to see some dilution in their shares. So I wouldn't be surprised to see maybe a little short-term weakness here. But I think the combination, these two companies, $5 trillion in assets, you can do a lot with $5 trillion in assets. So I do think that this is a nice move for Schwab. I think longer term, it's probably going to pan out pretty well for them. But in the short term, don't be surprised if maybe we move back down toward filling that gap. eBay is nearing a deal to sell StubHub for $4 billion to Viagogo. Not sure if I'm pronouncing that right. Was not aware of the company, but they are looking to sell StubHub for $4 billion. And then finally in London, Uber has been stripped of its London license. This is not the first time, but regulators say that the company is putting its passengers at risk. And they've had these discussions with Uber in the past that they've improved, but they still believe that there are concerns out there. And so Uber has 21 days to appeal. I know early on Uber was down about 4% pre-market. When we look at this chart, I mean, Uber has just not been a good chart. And this is why we don't buy companies that just keep getting cheaper and cheaper. I'm not a value investor in that regard. I want to see some momentum. I want to see something. I want to see a trend line start to break. You know, we've been in this downtrend for a while. We could keep putting in lower lows and lower highs. I always say I really like that Wall Street adage, there's never just one cockroach in the kitchen. And when you start to see bad news, a lot of times it's followed by more bad news. And until we start to see the chart improve, I'd be really careful with Uber. All right, let's move on to earnings. Really just one earnings report out this morning, and that was Jacobs Engineering, JEC. They did beat on their bottom line, $1.48 versus $1.28. And if I pull up, actually, I think I've already got this up. Yeah, here we go. If you look at the relative strength, this has been a pretty good company. We had a surge back in August in relative strength, and we're consolidating that. But the overall trend has been higher. I think we've got higher lows continually over the last 52 weeks. So I'm not at all surprised that JEC comes out with some pretty good numbers. Let me go ahead and check to see if I can get you a pre-market number on JEC. And then we'll get into the upgrades and downgrades. All right, JEC, it is up 2.5% pre-market, 95.75 from that 93.38 close. So it's not breaking out on the open, or doesn't appear that it's going to break out on the open. So we'll have to see whether or not we get enough volume and enough commitment to the stock to get it through that 97.5, 98 area. But it is a nice reaction. And again, from a relative strength perspective, I think JEC has looked pretty good. All right, next, well, I do want to mention after the bell, and I'm going to bring up one chart. Agilent reports after the bell, but I want to bring up Palo Alto Networks. They report after the bell today, and this was the chart that I featured in the Earnings Beats Digest this morning. So if you're not an Earnings Beats Digest subscriber, this is another free newsletter. You should be looking at this if you don't already get it. At earningsbeats.com, just click on the tab at the top, free newsletter, and here it is, Earnings Beats Digest, name and email. You're signed up 3 times a week, Monday, Wednesday, Friday. I put something out there, and it usually has something to do with earnings and or relative strength. So when we look at this chart, and what I was pointing out is this is one of those tough cases, because you've got the telecom group, which has been going down, telecom equipment. You know, we've seen companies like Cisco come out and disappoint. That's been a really poor performer. And then you've got Palo Alto Networks that, even though the group's been going down, look at the stock. The stock is up near a 52-week high. And it gapped up back in September. I think that was earnings related. Came back down, just about filled the gap, and then has been going straight up ever since. So it's a really good relative performer in a very poor group. That's a tough call. I mean, if I would rather have that than the opposite. I'd rather have a strong stock, having the strongest stock in a weak sector rather than the weakest stock in a strong sector. But I do think this opens the door for possibilities of a sell-off after earnings just because it's in a weak group. Can we make this breakout over 260? I think that's going to be the key. Can we open above 260 and take off? If we do, I like the stock. If we don't, then I have a feeling we're going to pull back, maybe get a 20-day test. Even if we get a strong report, even if they beat top and bottom line, if they can't break above 260, I think that could it could end up being a pullback after a gap up, maybe a pullback to that 20-day moving average. We see a lot of these companies after earnings. I'm sure that was probably one right here where gaps up, comes all the way back down, gap support, 20-day moving average, those types of things. So I'm never surprised at what the market does after an earnings report. I like to see what the earnings report is, and I like to see where it opens and where it closes, and I can start to maybe consider a trading strategy after that. But a gap up doesn't necessarily mean you're going to continue to see movement to the upside. I think that's very important. And if I was in a stock and it gapped up at the open, a lot of times I would probably take the stock or take the profits on the stock rather than to take the chance on what it's going to do afterwards. And this back here was a perfect example where you're at 235, you open the next day near 260, and in 5 days you're back at 235 again. All right, next up, upgrades, downgrades. Let's take a look at ARWR. This stock actually reports after the bell tonight, and it was upgraded today. I never quite understand why an analyst would come out and upgrade a stock the morning of its earnings when it's going to be reporting later, because in theory, well, hopefully in actuality as well, analysts, there's a quiet period heading into earnings. So analysts haven't had the opportunity to talk to management for a few weeks at this point. And so they should have no more knowledge today than they had a few weeks ago. So why weren't they upgrading 3 weeks ago? Why are they upgrading the day of earnings? I'd never have quite understood that. Why not wait and see what the earnings are? And then if you like the earnings, upgrade. But anyhow, it is being upgraded. I like the stock. I mean, look at the move to the upside. It's in the biotech space, which I've talked about a lot lately. Beautiful move in the group. And this has been one of the leaders. So I do expect some good news coming out, but is it already built in? That's the other factor, and we're just not sure at this point. Deckers Outdoor, this is in the footwear space. Footwear has been pretty good, but as you can see, Deckers is not. The stock being upgraded today, but I think there are other footwear stocks out there I like better. So I don't know. I'm not really going to agree with that one. NVIDIA got upgraded today. Remember last week, semis were getting downgraded left and right. NVIDIA escaped that. They weren't among the downgrades, but getting upgraded today, and it is showing a lot of relative strength. So I cannot disagree with this. I think NVIDIA looks pretty good. Downgrades, want to mention Netflix got downgraded by Wells Fargo. Their price target cut from 308 to 265. And you can see the stock just making a breakout last week, but where was the volume? That was maybe a little bit of a concern. The fact that there was just no volume on that breakout to the upside. This morning with that downgrade, the stock only down $1.50, so it's 308, not really a big deal, 0.5%. But I'd be watching that rising 20-day moving average. Netflix on a relative basis is at about a 2-month relative high. So with that move last week, it is beginning to show some relative strength. This is one that among the FANG stocks, I've not been a fan of. It is starting to improve. I would like to see it hold that 20-day and break out with more volume and see that relative strength keep moving up. The volume's important because I think it signals that some of that institutional money that was leaving back here in July and September on the selling is coming back in. That's what I want to see. Without that, I'm still going to remain a little bit suspicious. All right, let's move on. Monday setups. I want to just give you a few stocks here. I'm going to start off with Sleep Number, and I'm going to look at these from a longer-term perspective. So I'm going to go into a weekly chart, and let's go back a few years. And now these are patterns that are setting up. So these aren't necessarily go jump in at the open today. But you can see Sleep Number, even highs coming across here at about 50, struggling to get through on a weekly basis, have been able to close above 50. And we got the rising lows. So I see an uptrend and an ascending triangle. I think that is worth noting. UNH, it's United Health. Mentioned last week that the healthcare provider group really beginning to strengthen. I know this is a little messy, but what I see is an uptrend followed by a cup. And it's not exactly a rounded cup, but we've got a double bottom in here. This low back in September did not take out the low from April. And it did not take out the low that we had back in March of 2018. So I think we've still got an uptrending stock. Therefore, I'm going to view that as a cup, and I think a pullback would be a handle and very buyable. A breakout above 280 on a closing basis, a weekly closing basis on UNH would measure up to about 350. So that is worth keeping in mind. Intuitive Surgical, ISRG, this is actually one of the stocks in our portfolios this quarter. We got equal highs coming across here, higher lows. So we've got an ascending triangle on a long-term weekly chart. A breakout would be bullish there. CDNS, this is a software stock. Probably a lot of folks forgetting about it because the stock just hasn't been doing anything. But look at that negative divergence back in July. Higher prices, big negative divergence. That usually leads to consolidation in a 50-period test. Watch down around those low 60s. If we get another pullback, hit that 50-week moving average, that could mark a bottom here for CDNS. And the last one I wanted to mention here is HOG. HOG is on the 20-day. The daily didn't look very good. I'm going to bring up this daily chart for you. We had this gap up. We pulled back. We failed to hold the 20. We failed to hold gap support. Went back below the 50. Volume picked up a little bit, not a lot. So on a daily, and also there's a little trend line here maybe you could look at. So it just didn't look very good on the daily chart. And this is why sometimes it's good to maybe pull back, look at the big picture. Because what we have here is a downtrending stock that broke out on volume in October, and this pullback is testing the rising 20-week moving average. So the daily chart, to me, looks a little bearish because it didn't hold certain key support areas, but this weekly chart still looks pretty good to me. Now, if we go back down and go below last week's low of 35.44, I'd be careful, but otherwise, I think Harley-Davidson looks pretty good here. All right, next up, I am going to get into, I want to show you a little, well, I call it relatively speaking, this segment. I just want to show you some charts here. So first, let's start off with these relative strength charts in the various sectors. So technology, this is a relative strength chart. So here's technology and how it's performing versus the S&P 500. So if you want to beat the S&P 500 in 2019, you really want to be in technology. You want to have exposure in technology stocks because if the group is outperforming, if you're picking, well, if you're in the XLK, obviously you're outperforming. But if you're picking individual groups or individual stocks within technology, you got a much better chance when the group's outperforming. Here is your absolute chart. That was the relative chart. Here's your absolute chart. Making this breakout above 82.5, I think it looks spectacular. So technology continues to be very strong. Consumer discretionary. Now, remember, I showed you the chart where it doesn't look too bad here in terms of absolute strength. Got an uptrend in play. But look on a relative basis. The last 6 weeks have been horrible. And if you've owned consumer discretionary stocks, you might be feeling some of that pain. I still like the group, and I still like it on a relative basis going forward, but it's just going through a period where money is rotating away and into some of the other aggressive areas like the financials, like the industrials, and like technology. So it's an okay group. A lot of times maybe you've got stocks that just aren't going anywhere and you're watching the market go up. It could be that just the group itself is just not seeing a whole lot of money rotating in. In fact, you see it rotating out, and that has been a problem in the group. Communication services, I don't really see a whole lot of anything, to be honest. There are parts of communication services that have done very well. The group is broken out. We're starting to show a little relative strength, so maybe that gives us a little bit of hope. But really, we're almost right where we started the year in terms of relative strength. So if you were in the XLC all year, you pretty much have just done what the S&P 500 has done. Now, where we are seeing the strength, though, and where I think we need to pay attention is industrials making this breakout. Here you can see in mid-October, we made the absolute breakout, and then probably about 2 weeks later, we made a relative breakout. That, to me, is very encouraging. Also, the relative PPO, the weekly PPO, on a relative basis has gone positive. The 20s crossed up above the 50. Got some positive taking place here, and I think this is a group that we want to continue to monitor and potentially trade within. Financials, really looking good. Here, the PPO is very strong, strongest it's been since back probably in early, first half of 2018. Relative strength we've broken out. Absolute chart, you can see we've got breakout here. We also broke out above that January 2018 high. This is a really nice looking group. The 20s above the 50. Financials, and I mentioned earlier, banks have been doing very well. The XLF has been doing very well despite falling Treasury yields. We were up to almost 2%, 1.95%, fell all the way back down to the low 170s, and yet financials continue to perform well on a relative basis. I think that's telling us something, and we need to pay attention to it. As far as the industry groups go, what I was going to do is just kind of hone in here on the healthcare group. Healthcare is breaking out, and so I wanted to just point out a couple of these areas before we get into the three you must see to wrap up the show. Here's healthcare providers. Beautiful move up relative to the S&P, breaking out. Still need this breakout on a absolute basis. Here's the relative move to the upside, and I love this double bottom taking out this middle high. That is what you want to see, because normally in a downtrend you have lower low, lower high, and then a lower low. When you don't go to a lower low and you just test it and break back up, that tends to signal the end, and in this case it's the relative end. So I'm looking for some continuing strength here. Medical equipment, it's not bad. I mean, you can look at the absolute chart, see we're breaking out, but on a relative basis hasn't been a great area over the past 2-3 months. Really, ever since money rotated from growth to value stocks, that's about when this group started getting hit to the downside. But I still see an uptrend here, so I'm not giving up on the group. I just think right now it's taking a backseat to some of the other areas in healthcare. Pharmas, I'd be careful with. They're more defensive. I don't like defensive stocks in a bull market that's in a nice advance. So this is a group that I'm not really a big fan of. A couple of stocks in there pay nice dividends, but if you're looking for capital appreciation, I think they're better places. Medical supplies, that group is definitely starting to strengthen. I want to see this breakout. 985, if you start seeing a print of 985 on this group, we still got probably another 3.5% to go. But that would be very bullish, and we are starting to see some much better action on the relative chart, although we still are in negative territory on that relative PPO. The next one up, biotech. This is probably my favorite area of this group. I just love the fact that we've made this breakout to a 2019 high. We've broken this downtrend line, and you can see the relative strength really building quickly, taking out or on the verge of taking out that high back in June, relative high. So this is a group certainly worth considering. And let's see, I think that is it. Yeah, that's it for healthcare. All right, let's go ahead and move on to the three you must see. I'm going to start with Office Depot. This is a stock that last week, early over the last 2 weeks, 2.5 weeks, we've been seeing some downside action. A lot of volume on a breakout above about 210, 220, right in here. We've come back down, though, and a couple of times last week went well below the 20-day moving average and then came back later in the session. I'm not sure if this is accumulation or not. This is not a great long-term chart. When we pull up a longer-term weekly chart, you can see all this downtrending. Maybe watch that rising 20-week moving average and make sure that that holds. If it rolls back over below the 20-week, I'd be more concerned. But this is one that could be bottoming and turning higher. I just wanted to point this out because those reversals, both Thursday and Friday of last week, are maybe telling us that there's some accumulation taking place. All right, next up, I am going to show you the GLD versus the S&P 500. I mentioned gold earlier, needing to hold 1450. GLD on a relative basis to the S&P has been down for more than 8 years now, almost 8.5 years. I am not a fan of gold, and I still think equities are the better choice, and I think this chart proves me out. That's why when gold's moving in the short term, fine, jump on board. But when the short-term chart starts to break down, this long-term chart tells me to stay away. Last one I wanted to show you is NetEase. So let's go back over here. I'm going to bring this one up on a relative basis. And NetEase making a breakout on Friday. Look at the volume coming in and look at the relative strength that's been building on NetEase relative to the Internet group. Internet's on the verge of breaking out. if internets break out, one of your leaders is NetEase, and it's beginning to show accumulation. So I wanted to point this out as the third, actually the number one stock of the three you must see. All right, that is it. It's a wrap. I want to thank everybody for joining me today. Again, no Trading Places Live on Wednesday, but we do have the mini series coming up on Friday that I will be presenting, and that is the creation and design of winning portfolios. It is open to anyone who signs up for the Market Vision 2020 newsletter. Again, if you go into our website, earningsbeats.com, click on Market Vision 2020 at the top, just put in your name and email. It's that simple. We have free giveaways worth thousands of dollars. Actually, we're going to have giveaways coming up on Friday at Earnings Beats. You don't want to miss this. So anyhow, make sure you sign up for that. I want to, again, thank everybody for tuning in. Have a great day today. Enjoy your week. Have a happy Thanksgiving, and talk to you later. Happy trading.